Good evening. I'm Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for the sea of red behind me, as you can see. Part of it's got a little green, but it's basically a sea of red on this Thursday, the 17th of August, 2023. And the time, I'll give you that, 6:05 or so p.m. Central Time. Now, remember, the market is changing its attitude, and people are getting ready for the dog days, the last days of summer. They're there. The mentality's there. We have Jackson Hole next week. I do hear on CNBC the Fed Chair Powell will speak on Friday. That's good. If you're watching China, the situation there is terrible. They won't admit it. They've created a nightmare for themselves. But the property markets, the shadow bank there, I forgot the name of the company. There's names that is a Westerner. They're difficult. They had to put security guards around it because people aren't getting paid. The government's doing nothing about it. And the situation is a loss of confidence. You know, that is throughout the country. It's be it TikTok, whatever, people here. And you think they're going to invest in things? You got to be kidding, because that isn't going to happen. You're going to buy property. These developers can't finish the projects they have. And remember how this works. They're able to take a big chunk of your money. It used to be all of it. Now they have to keep a certain amount in reserves, but a big chunk. And it was like a Ponzi scheme in my head. I'm not saying that Ponzi for them. Here's what it is. I'll take the money from this family, and now I can use that to finish that apartment or parts of apartments I have going. So we'll get to yours in a year, but you're guaranteed your price. And that's what they're doing. They're using the money. Well, in part, you know, Ponzi schemes are, I'll take the money from you to give this guy money, but I'll keep a good chunk of it myself so that guys, oh, I'll get you your money as soon as you want it. You give drabs. Well, you can't do that. You know, at least when we do things here, we have things called escrow accounts. And you can dole money out as jobs get done and things of that nature. You can buy a finished place and you start paying on it as you take possession of it. It doesn't work that way in China. You buy a piece of property, a condo, a home, and from the time you agree to buy it, you're paying on your mortgage, even though it's not necessarily built or finished or whatever. Very different world. The other part they're getting is obviously American companies running away from them. You're going to hear that the solar part, our trade representatives are now going after China, saying they are just putting things into other Asian countries. They're subsidizing what's going on, and that's how they're keeping prices as low as they are. So look for news on that. It just appears that no matter what happens, the Biden administration is out to beat down any chance of a relationship with China that we might have. I'm not saying that's a bad thing or a good thing. I'm saying what it is. Please understand that. China's done an awful lot wrong. How they subsidize, how they keep prices low. They've done a lot of good things, too. I mean, they've got some neat cars now that are out there. They're capturing world markets. They are able to produce items that all of us use every day in our life that we can't do here anywhere near the cost they can do it. So we got to get away from American propaganda that everything about China is bad. Everything about China is not bad. Not even close to it, okay? So government's different. Yes, the people. I'm going to repeat it over and over. No, I'm not that, and I would stand up right away. People aren't like that almost anywhere. People are basically good. Not all of them. I live in a city of crime, so you've got that. All right. I want to remind you before we get into everything that I have a special report up on interest rate futures. Now, I think I did a pretty good job on the stock report if you saw that one. A real good report. I'm really proud of that baby as things are turning out. Well, I've given you another one. My reports are only up for 3 business days. So a day is counted. I put it up yesterday, so yesterday to today is the first day. Today to tomorrow will be the second, and I did this so you can look at it over the weekend. Monday it will come off. I wish I could tell you the time. The computer set that, and they just take it off. So you have a couple of days to look at it. How do you do this? All right, you go to our website, and under the word, you'll see it on the top right, research. It's iRapstein.com. Now, I talk during them because they're videos. You're going to get price counts. They'll look like this and give you ideas where markets are. The seasonal charts will all be in there from my good friends at More Research. I'm going to cover the 30-year bonds because the difference between the 30 and the 10, and I haven't done the 30, I don't know that I've ever done a special report on them. How's that? And I wanted to do it. There's only like a 12, 13 basis point difference, so why not look at them? First of all, I can't imagine anybody wants to buy that instrument when you can get a 10-year the same rate unless you just think permanently interest rates are going to stay high, but then why can't they go higher? I mean, that's part of the problem. So, again, IRAPstein.com. You can move your cursor to the top here. You can call my staff if you need help. And after this weekend, you're on your own. Probably won't be there anymore. It's just going to disappear on Monday. And again, I don't know the time of it, so you're at the mercy of the computer. All righty. Now, be careful about the automakers, all right? All of them. They're on the target. The votes are going to happen very shortly. All the union bosses will get their people to vote yes. The bosses from the union, the head people, have the strike permission. That it happens every time there's going to be one of these. The rank and file step behind it, and they'll get there. And somebody's going to be targeted. Now, how long they get hurt, I don't know. I am certain that the auto manufacturers have ramped up production to a degree. They're ready to fight what they have to fight. The unions want a 40% increase in wages. That is just not going to happen. So where do we end up? I don't know, nor do you. But understand it's about to happen. It's another weak spot for the market, and it's another inflation target for everything, right? That's how it's going to work. Now, it won't affect Tesla, but Tesla's falling on its own. Why won't it affect Tesla? They're not a union shop. But yet, here we go. So when markets go down, the weight of them seems to pull on everything. And all of a sudden, you start saying to yourself, is Apple fairly valued? Isn't that a little high? Now, for Apple, remember, if you go back and you just look at the release every September, when there's going to be the new release of the iPhones and the watches now and the Macs and all, the stock typically just prior to that does rally. So we're not there. This is middle August. That meeting's still a ways off. Just remember that, but keep that in the back of your mind. You got to keep a list of things that you know what the nature of the market is. On target, this is a pretty wild swing in the market that we've recently had. You know, Walmart just looks phenomenal. They're taking on Amazon now, especially with the membership subscriptions, and I really believe that they're going to do a heck of a job. When times get rough, where do people go? They run to a Costco. They run to the Walmarts to buy the food. When I was in Montana, we were buying all our food at either Costco or Walmart. I mean, that's what they're built for. Small towns, Montana, they're the big daddy. They're the giants in the room. And the food is great. The prices are right, and that's how things work. Well, in Target, it's a little more upscale. All right, the clothing, remember the fashion design clothing? Oh, I got to have that collectible, blah, blah. All right, you're just whipping. You're out of your downtrend. You're certainly not in an uptrend. We're sort of in the middle of no man's land. There is no trend. You got a lower low, higher high, a very strong $10 move that happened in there. And now the market came back today and just sort of sitting in between going, what do I do next? But tell me the number the market's having the trouble with. What number do you see on the chart? The 18-day average of closes. The market just can't seem to get away from that number. Hasn't established what it wants to do. It did tell us that when it gets under the Bollinger Band, it's ready to pop, and it didn't have the strength to get to the upper one, and the resistance is still the 18-day average of closes. Momentum-wise, you were oversold, and you've begun the correction of that. So I see a market that is just neutral, not a lot there. I'm going to repeat, I'd be scared of Lucid, Rivian, anybody that's got workers in these cars, that could be a problem. Now, I was hoping, actually, you would get down and challenge the 200-day average in the Bollinger Band. You got pretty darn close. You missed it by 80 cents, all right? But that's what I've been looking for on the downside. Are we embedding? So let's take a look. Both numbers are under 20. Both numbers yesterday under 20, the day before under 20, the day before under 20. You're fully embedded, not the day before. So you got 4 days in a row of that. Rallies probably sold until the red line closes over 21. Got it? So I don't think this is out of the woods, and very real price objective could still be the 1940 area. In UGA, be careful of wanting to be short gasoline right now. There's a strong seasonal tendency for this market to lift the last week of the month. So don't fight it. I'm giving you what the seasonals are. Will it do it? I don't know if it'll do it or not. The chart action is bearish. Momentum is down. You're under the 18-day average. Market is acting like it still wants to break down. If it does, 69.46 is a potential target. The resistance is 72.11, but I see sideways action more than I do a trend. In XLF, the financial services, they've just cratered. Will they develop an embedded reading? I don't know. What I do know is the first challenge of the 200-day average in gray and the Bollinger Band happened today. Is the market going to just fall from there for this, or is it going to respect that and start playing around? It is Friday tomorrow. We could get profit taking, and a lot of markets or traders just say, I'm worn out. I'm talking the pros that are selling this market short. Why pros? Because you as the typical person don't go short. I know that. You know that. But the pro is. In XLI, which is leaking to the downside, again, very oversold now. When you're under the Bollinger Band, that's one thing. But there's a problem here. What is the problem? Look where you closed in the range today and the range yesterday. On lows of both days under the Bollinger Band. Until the markets get back over here, all of this becomes a top, a major top. And until this is violated, there's more room. You have opened the door up for 103.28. Another $3 from here. So be careful. NVIDIA, we're going to get the earnings. This is the darling market. I wrote myself a note, and I'm going to do this. I don't want to play the short side of NVIDIA. I'd rather just not play. I've got plenty of other stocks. Why? Because the one stock in America that everybody thinks is the poster child for AI is this stock. So these pullbacks that you get inevitably will turn out, in my opinion, to be buys because people want to be in this. Now, have you backed off from the high that much? Not really, 10%. Let's assume that this area here, you're in the, what was that number? Probably the 450s, and you got down to 403. You've had a correction. Does it have to do any more? Not really. The market actually turns bullish if you take out 452.68. You'd have higher lows and a higher high, and you'd open the door for a retest of that band. The bears have to defend it as the market's down, but I'm telling you, for one, I'll walk away. In Coinbase, all the good news isn't helping, all right? Not yet, at least. And the market keeps coming down. It's fully embedded. Do you yet believe that when you get that embedded reading, the power it has on the market? Momentum, learn this. Momentum leads the market most of the time. I'll never say always. You know why? It's the wrong definition. You can have price every now and then lead momentum, especially correction days and so on. But typically, it's not that pattern. Typically, the pattern is momentum locks in and price follows that momentum. It's still bearish. The home builders, same thing. Okay? You've had your downside momentum. You've spent now the better part of a week under this. Is it going to be a breakout to the downside? It might. What's spooking the market? The idea of 8% mortgages. It is wide open. You were national average today, I think Freddie Mac said it was 706. Now we're sitting here and the door's opening and people are wondering. Now, keep your mind pleased this way. Listen to what I'm saying carefully. At bottoms, everything gets the most bearish. At tops, everything gets the most bullish. As these markets are coming down and interest rates are moving, this is where people are now saying it's going to get worse and worse. I don't know if it will or won't, but I'm open to the idea that how you form a bottom is you get everybody bearish and it's too much. You make a top when everybody's too bullish. Keep that always in the back of your mind. This is not an embedded reading, no. But I do see a top, and it's going to have to chug right back through all this to do it. Is it hard to do that? It's only a $4 move. But on a chart, the pros will be selling, not buying. Those caught in this market will be selling, not buying. And no, the market is never a short sale, in my opinion, under a Bollinger Band. You'll never hear me say to do that. If I did, I was on a drug. I don't know what else, or my wine, love wine. It would be one of the two, because 95% of the time you'll stay within the band. Why would I break that rule? I'd rather not catch it. There's always another market to trade. There's always another bull. There's always another bear market. Always. XLE. Bullish divergence. How's this? Momentum turns down. You're fighting to stay over the 18-day average. You've narrowed in the trading band dramatically right now. Market seems to be just stuck for a little bit here. Be careful with that one. In the gold market, how does gold possibly beat rising interest rates and a strong dollar in this environment, and a Fed that is determined to break the back of inflation? And you want to own gold. Enjoy yourself. Silver market. Silver surprised me with a bounce today, as strong as it was. Futures market is acting better than I thought. It's still got bearish embedded readings. Lose them, and I would say to myself, I don't want to be short anymore. Now, I'm telling clients, be very careful right here, but the bears are still fully in control. You start taking out today's lows in the futures, make them do that first. Then this market probably follows suit. But let the futures dictate. This market counts on the futures. It doesn't lead it. Copper, you move to the right-hand side of the Bollinger Band. What did I teach you? And you've heard me say it. If you count the days, you rarely stay more than 5 days outside of a Bollinger Band in a row. Rare, rare, rare. Can't go to 7, 9. I've seen it. But you're playing the percentages. So if 95% of the time that works, I'll let you win that 5% bet. It's still bearish. It's a question of how bearish. That's all we're arguing with. And you move to the right-hand side. There's no sign here this is a let up in this market. None at all. Are we embedded? Let's take a look. Both numbers were under 20 today. Both numbers yesterday under 20. The day before they're under 20. The day before under 20. You got it. So the first good hard rally without taking out the prior day's low, probably going to get a spin in the market. Okay. Market has a way of moving 10 cents on you like that. In the futures. And this will relate to that. TLT. I have been the big bear. You know I have been for the longest period of time, since July. I said there's something wrong in this market. And it has just kept coming down. BND's the identical thing. Now you're fighting both in the futures market and here against the Bollinger Bands. You are embedded. Breaks in the market are buys, in my opinion, not up against the Bollinger Band. And the short time to cover in the euro is right here. Is it embedded? You know, that's going to be interesting. Both numbers today are under 20, yesterday too, and the day before. You've now made it into the embedded category. So a good rally in the market, unless you get the number to close over 21, the bears will show up. Now, at some point, what will happen is you'll get over 21, stay there, and you'll get a better short covering moment. Don't play for that. Make the market do it. Don't anticipate it. Anticipating will break accounts. I've learned that the hard way. You don't have to believe me. Anticipate it. Enjoy yourself. All right. When I take a look again, I want to remind you, if I can get that to come up, I don't think it's going to. The ad, if you want to see the special report, move your cursor all the way up here, and you'll be able to see the report. As I said, it's going to come off Monday. My reports are only up 3 business days. I put it up yesterday to today's the first day, today to tomorrow's the second. It'll be off Monday, and it could be off early in the morning, later in the day. I don't know. The computer determines it. I'm Ira. You have yourself a good day. I'll catch you in the morning. Take care.